Let's talk money.
Hello and welcome to Let's Talk Money, your weekly personal finance date with me, Surabhi Upadhyay. Now, market regulator SEBI recently stopped mutual funds from taking in fresh inflows in global funds which invest in foreign equity ETFs. That is because the MF industry was close to breaching the $1 billion limit that has been prescribed for such funds by the Reserve Bank of India. So viewers have been asking us what the options are now if they want to invest in global stocks. And that is exactly what we're going to discuss on the show today, because remember, this is a show where you ask and we answer. I have with me Samir Kaul, MD and CEO of Trust Plutus Wealth, joining in on the show today to help us unravel the mysteries of global equity investing. Samir, welcome to the show. And thank you so much for joining us in the studio today.
Thank you for having me, Surabhi. Good to be here.
So, I can imagine where the queries are coming from, because I think even, retail investors really follow what's happening in global markets. So we know that Japan is going through this major boom. We know that NVIDIA and these AI stocks have been, going up in a sort of a unidimensional way. And I think that's where a lot of the buzz comes in from. So your first thoughts on the subject: should we as Indians consider global equity markets?
See, I think the provisions have been around for like a couple of decades now. And I think slowly Indians are realizing there is value in diversifying your portfolio. I think more and more Indians are sending their children overseas for education. So it can be a good source of savings offshore. It's a good place to diversify away from your local assets. And of course, you get access to companies that you won't get access in India. So I think these are the reasons that people should think about, global diversification.
Okay. Well, the question is sort of where do you start? Because I think the easiest route for a lot of investors would be do it through Indian mutual funds, because you don't have to do currency conversion, etc. You park your money in rupees and they do the rest for you, right? That's pretty much how it works.
I think that's a pretty efficient way of doing it. There are some caps now that the regulators have imposed both on the ETF side and on the mutual fund side. But that's the logical way of starting out. But now I think GIFT City is going to become a more relevant jurisdiction through which you can basically remit money using LRS. Of course, foreign banks have been around for many years in India. Their offshore branches are able to offer products. And then there are funds which are basically allowing Indians to invest in these funds. And the underlying funds are then invested in global markets.
So I think we have to cover a lot of ground, and we need to understand each of these avenues in a little more detail so that investors can sort of take their own decisions with respect to what route suits them best. You mentioned GIFT City. Just tell us a little more about it, because if my memory serves me right, even the stock exchanges, I mean, NSE itself was trying to set up these connects that would allow Indians, resident Indians, to invest via the GIFT route. But is it operational? How's it supposed to be?
No, I think historically the only avenue available was to go through a jurisdiction like Singapore or maybe Dubai and basically set up a fund structure there. But I think now the government has realized that both from an inbound and outbound perspective, GIFT City can be a very viable alternative. So I think there are already funds being set up, and you can essentially route your money through GIFT City and basically under the LRS provision invest outside of India. And I think in the years ahead, my own view is that will become a most sought after and very relevant jurisdiction to basically set up both incoming as well as outgoing funds and allow investments across India as well as offshore.
Okay, so maybe the future is going to be in GIFT, but we're in the present right now, so we need to see what options we can work with over here. And we have lots of questions coming in, so let me straight away get to it. Our first query on the show, and it's Prashanti who is joining in. Prashanti, tell us, what's your question?
Hi, I'm Prashanti Shivalenka. I work in venture capital at Cactus Venture Partners here in Mumbai. And as a budding investor interested in gaining exposure to global diversified growth, especially the US tech, how can I buy international stocks of some profitable companies, say NVIDIA or even Apple as a matter of fact, whilst being here in India? Now, I'm aware that there are several avenues like ETFs, ARDs, or via brokers, etc. But which one's the most viable option?
Okay, I think she's summing up the whole reason why we're having the show. And I guess that's what it is, right? People have exposure to information, so they know that there are a lot of these, new sectors, new age businesses, which we don't have here in India yet. So let's start, analyzing route by route. Now, for mutual funds, the limit for ETFs is 1 billion. So right now, these funds can't accept more money, right? Do I have the MF route available to me at all as an
I
investor?
think at this moment, both the MF and the ETF route, I think the limits have been exhausted. So I don't think they may take fresh money.
Okay.
But I think to answer her question, there are local firms which basically have tie-ups with global brokerages. You can open accounts with them, and then you can essentially buy stock. Or like I said earlier, you can talk to a global bank which is operating in India, and through their offshore branches, you can open accounts in jurisdictions like Singapore. And last but not the least, you can invest in funds which basically give you exposure to the kind of stocks that Prashanti was talking about.
So if we do an analysis of these different options available, say I were to actually open an account with a global bank, and then that would be an offshore account, right?
That's right.
Then I repatriate Indian rupees from here, they get converted into dollars or whatever, euros, and then the investing takes place.
That's right.
Is that an expensive route? I mean, just purely from a cost perspective for an investor.
No, I think whatever you do, ultimately you will be investing rupees which has to be converted into dollars, and then either you send it through, like I said, Gift City, or you do it through a rupee mutual fund, or you basically send money to, say, Singapore. So it will involve some level of conversion. But I think the important thing is that the mutual fund did not have a single investor limit. I mean, I could invest more than $250,000 because I was investing in rupees which were then eventually getting converted. If you basically do this on your own, then you come under the $250,000 cap, okay, which is the cap per financial year. So that is something you have to keep in mind. Those are the kind of broad differences, and that is why, like you said earlier, that the mutual fund route here, the fund of funds route, is far more efficient and easier for investors to access global markets. But right now there is a restriction because of overall limits.
Just a question so that viewers are aware of this 250,000 limit that we keep talking about, USD limit. Now, this is the liberalized remittance scheme.
Yes.
And each individual is allowed to repatriate a sum of up to 250,000 USD, right?
That's right.
So whether I go through mutual funds or I go through specialized funds that are set up in Singapore or elsewhere, I'll still have to abide by this particular limit. Isn't that correct?
No, that is if you're doing it on your own. So if you go through, if you start buying stocks on your own, or you invest in a fund offshore, then this limit comes into play. This limit is not applicable if you're giving rupees.
Because it's rupees going to a mutual
That's
fund.
right, that's right.
So you can actually invest over and above the 250,000 USD limit as well. But like you're saying, I mean, mutual funds, that door's pretty much shut till regulations change. Because they've already reached their caps. So, for someone like Prashanti, who's young, who's looking at building up a stock portfolio, let's talk about the DIY approach first, because a lot of young investors have gotten used to that. There are apps, there are fintechs, which allow you to buy stocks. How do you directly buy stocks?
So you can essentially work with a fintech who has a global partnership.
Okay.
And basically they'll have a partnership with a global brokerage. So the global brokerage will provide the back end, and the app can basically provide the front end. So these people can buy, but my recommendation is that they should not get swayed by the recent news flow. And probably a good way for DIY investors to get started probably is buying the ETFs of a broad-based index like the S&P. Because that is something that probably is more useful for them and less risky than just going and buying, technology stocks maybe at excessive valuation.
Okay.
But you can do this on your own through, like I said, domestic apps. They have these tie-ups. There are other global brokerages that are working with Indian partners, and that partner can basically give access to the global brokerage platform. So your account gets opened with that platform, and once that account gets opened, either physically or digitally, you can essentially, buy these stocks.
Got it. All right. So look out for some of these platforms that could offer you the option of directly buying international stocks. We have another query. This one is from Ashish Agrawal. He's written in an email to us. I'm quickly going to read this out. He says, can we invest in US stocks via platforms like IND Money? Can you tell me about any other platforms that I can do some research on and then arrive at a good decision? So I think no recommendations here, but just so that people are aware, what are these platforms or fintechs that allow you to buy stocks?
Like we just discussed, I think there are these local firms with global tie-ups.
Okay.
I think it's important that each DIY investor does their own diligence, because we are not here going to be recommending any platform per se. But I
But
think
just to name a few so that people have this at the top of mind and they can do their own research.
I think I have heard that platforms like Grow, like IndWealth, I think these have global tie-ups.
Okay.
Okay, there is a global brokerage called Interactive Brokers, which is highly prevalent in India, and they are doing business. So I think DIY investors can search out and look out for these kind of names,
Okay.
and then essentially try to open accounts with them, and then try to facilitate their investments.
And if someone is going to go via this DIY route, what are the critical aspects they should ask themselves before choosing a platform so that no one gets burned, your charges are sort of in sync with the industry norm?
Yeah, I think like you rightly said, I think the background and the vintage of the platform is important. How long they've been in business is important. If possible, their own financials should be kind of considered to make sure there are no fly-by-night operators. And of course, what is the kind of width of product that is being offered? What is the cost of basically buying? What is the ease of buying? I think these are important factors to keep in mind when you start to basically look at trying to create your own portfolio.
You mentioned costs, Samir. So just a question there. Apart from the forex conversion charge, which you'll have to bear no matter what platform you choose or which route you choose, apart from that, if you go through these platforms, is there hefty brokerage involved? I mean, any other kind of transaction charges?
I think it depends on which platform you choose. Sometimes platforms charge you a kind of fee per annum. Sometimes they'll charge you a transaction fee. Okay. So it can all range from like 5 basis points to 100 basis points depending on the platform.
Okay, fair enough. So that's the DIY route, but there's also the fund route. Remember, there are a whole lot of funds which are either set up in India or set up in overseas jurisdictions through which you can route your global investments. We'll talk about that after the break and, of course, answer some more questions as well. So keep it with us.
Let's talk money